I'm Rob Macdonald, Vice President of Exploration for Southern Silver, and I'll speak to you today on developing the next major silver resource in Mexico. I will be making forward-looking statements, so please be warned on that. And so I'll focus primarily on our flagship asset, the Cerro Las Manitas project. It's a silver, lead, zinc skarn system located in Durango, Mexico. At this point, it is one of the largest and highest grade undeveloped silver projects in the world, with indicated and inferred resources totaling 335 million silver equivalent ounces in both the indicated and inferred categories, split roughly 40% indicated, 60% inferred. It's relatively high grade mineralization at an average grade of 326 grams per ton silver equivalent in a well-established silver mining district in Durango, Mexico. We've just released PEA on the project about 2.5 weeks ago. It is, showing a 15-year mine life for the project, very robust project economics, high revenues, and high free cash flow within the cash flow model, and then as well balanced precious and base metal revenues coming from the cash model. We own the project 100%, and we have a full treasury to continue work through 2022 and into 2023. Further catalysts that we have within the company, we have the PEA, and so we're going to be going out and talking about it and presenting like we are here. New discoveries at our flagship Cerro Las Manitas project. We continue to grow the resource, and those additions were not included within the current PEA. We have potential engineering upgrades to the work that we're doing. We feel that the PEA is an excellent base case, and that there is continued upside in the project that can be achieved both through resource growth as well as in other engineering initiatives, and I'll touch on those very quickly. And then we have new drilling at our Oro project. It's a porphyry copper project located in southern New Mexico, and we started working on that to give our shareholders some exposure to copper and exposure to other minerals, and so we're continuing to drill on that. So with the PEA, we are showing a robust project economics with excellent silver and zinc price leverage. The base case after tax NPV at a 5% discount is 349 million, which translates in Canadian to $1.55 a share, internal rate of return of 17.9%. At the base case plus 15, you're seeing a much more robust NPV, 5% of 561 million, and internal rate of return of 24.4%. We were able to capture about 78% of the mineralization within the mine model, so we have 24 million ton deposit, gives you a 15-year mine life. High annual production, 11.3 million ounces silver equivalent a year as it's modeled, and that includes 4.7 million ounces of silver within that silver equivalency. Life of mine production is 168.8 million ounces of silver equivalent, and within that is 70.8 million ounces of silver. High revenues. Initial capex is relatively manageable for an underground deposit at 340, and is very well located in a very mining friendly jurisdiction in Durango, and the project itself, it's surrounded by producers. It's a very established mining and exploration district within Mexico. Continued upside, I'll touch on, again, more new deposits, adding gold to the process flow sheet, which we don't have any credit for in the project right now. And then as well, we're looking at ore sorting to increase the value of the project. Quick on the market capital profile. We of course feel we're undervalued, as I think most people sitting up here believe that their companies are undervalued. We're sitting at under a $60 million Canadian market cap for the asset that we have. We believe it supports a much higher market cap in the company. And then I just have some analyst coverage and recent ratings that suggest again that we should be trading at a much higher market capitalization or share price than what we are. So again, to reiterate what Greg was saying, these are buying opportunities at this time. We're in a time where metal prices are depressed, and it's being reflected in the junior market particularly. We have an experienced management team and board with a history of success, particularly with major projects in Mexico. And I won't go through them, but there are some, clearly world-class deposits. I'll go through them all, I should say. World-class deposits, including, Peñasquito, the San Nicolas mine, Los Gatos. So again, people that know how to advance projects and bring them to production decisions, either within the companies that they're operating or through sale or joint venture of the asset to producing companies for the benefit of the shareholder. Again, just very quickly, starting to run out of time here, but again, I'll focus on Cerro Las Medidas. We're sitting in the heart of the Faja de Plata of north central Mexico. We're in southeast Durango. We're on the interior plateau. Excuse me. The interior plateau, so we're not in the mountains. We're out of the way of the narcos. As I like to joke, we're out in the middle of the bean fields, not the marijuana fields. It's a very safe place to be, to be working, and again, with supportive local community. Again, jumping to the EV per ounce for the company. In terms of projected production, we sit up there with a number of major developers as well as producers, and the enterprise per ounce is again a reflection of the junior market right now is quite depressed, and again it's an opportunity to get in and on this project. And again, to reiterate, large mine, large scale underground operation, and a production profile that compares favorably to many others within our peer group. We like the cash flow on the project. You're looking at life of mine gross revenues of over $3.7 billion. I show on the right there the cash flow, after-tax cash flow for the project. In blue is the base case scenario. In gray is the base case plus 15%. And so we really like the first eight years. The engineers did an excellent job of scheduling the mining on the project. And so we're looking at, $84 million average per year free cash flow in the project for the first 8 years. So it is quite robust. It drops off a little bit in the last 7 years, but we believe that is the opportunity where we add ounces. We're not just tagging them on at the end of a 15-year mine life, but we think we'll be able to significantly upgrade those years 9, 10, and 11 with the new resources. And again, just the production profile. Again, you see high production rate on a silver equivalency basis in the first 8 years, obviously reflected in the previous slide in the revenues. And the big thing here, again, we have life of mine payable silver production of over 70 million ounces, and there aren't that many projects out there that are looking to produce 70 million ounces of silver. It gets to be less and less out there right now. And just very quickly, got about a minute left, so I won't get through much of this. But again, we're in a great area, active exploration and development jurisdiction. We have infrastructure running right through the project, 2 federal highways, a rail line, power lines. We're a 10-minute drive away from the town of Guadalupe, Victoria. It's a town of 30,000. It acts as our base of operations. Excellent relations with the local ejido right now. We have exploration access agreements in place. They have to be upgraded to exploitation agreements, but we do have a fantastic relationship with them right now. And we're now in the process of initiating the baseline studies that will go into permitting and whatnot with the project. And then just a quick shot of the Cerro. Distribution of the mineral deposits, and you can see how they're distributed around a central intrusion, which acts as a heat pump for the system. And Then just to go through very quickly, again, we have completed over 15,000 meters of drilling over the last basically year on the project. This is drilling that was not included in the initial resource or the resource that we used for the PEA. And so what we've done here is effectively joined two deposits, the Mina Labacona deposit and the Scarn Front deposit, and we've got about a 400-meter strike length of mineralization that still has to be built into for updating the resource and then built into updating economics as we move forward. And so this is really what we're looking at, continuing the pathway to production. So all the ESG stuff is now, of course, very important. We're getting our establishing the permitting parameters that we need to move the project forward. Again, baseline studies and continued social and government engagement. We're going to be doing the more detailed budgeting on the technical aspects of taking the project from a PEA stage to a pre-feasibility into the feasibility stage. And so figuring out, how much drilling is going to be needed and all the costs of all of that work, but also working at further technical opportunities to upgrade the project economics, and that includes adding in those resources, looking at ore sorting, which could both reduce the capital costs and reduce operating costs on the project, which again would lead to a higher internal rate of return for the project. So we're focused on that now for the coming 6 months, and then also looking at some gold recovery. It was never in the process flow sheet, but there is some small value that we could add there as well. So there's a few things that we keep on, rust never sleeps, as they say, and we keep on working on the project. But that's really my time right now, and so I think, so thank you very much, and thank you.